Hello and welcome back to The Note. Obviously concern continues to focus on emerging markets at the moment, but for the remainder of this week perhaps we should start looking once more at developed markets and their central banks. On Thursday we have what could be a critical meeting of the European Central Bank when there is much speculation that they will actually be trying to cut rates, which is difficult given that they're already at only 0.25%. Then on Friday, as always on the Friday of the first week of the month, we have non-farm payrolls figures from the US, which are likely to be particularly noisy at the moment, given some very surprising data of late and given the fact that we have a new person in charge of the Federal Reserve. With me now to help navigate through these challenges of the next few days is the head of global strategy for Brown Brothers Harriman, Marc Chandler. Marc, thanks very much for joining me in London.
Thank you.
Okay, let's start by discussing the ECB. Here we can see what's happened to the repo rate, now down about as low as it can go. Meanwhile, we see inflation steadily dwindling away in the Eurozone. How do you view the choice that Mario Draghi and his colleagues are going to have to make?
Sure, I think you're right. It's a very tough position for them because the ECB says there's two pillars of monetary policy: money supply, which is also weakening, and inflation, which, as you point out, is also weakening. But it's a question really whether they can cut the refi rate. Right, as you say, it's 25 basis points. The problem is really not the cost of money in the Eurozone. The problem is access for small and medium-sized businesses. And the other issue for them is the volatility of EONI, the overnight rate.
Right.
And so we've seen recently where the EONI, the overnight rate, trades above the refi rate. So that's not really the ceiling. What we want to do, what the ECB ought to do, is lower the ceiling. And that's the lending rate, which right now is at 75 basis points. So they can reduce the corridor and thereby reduce the volatility. I think some people are talking about a cut in the deposit rate, which is at 0. I think a negative deposit rate would be more disruptive. It's unprecedented for major countries, even Japan. For years of deflation, for years of near zero interest rates, never went to a negative deposit rate.
So that would really be actively discouraging banks from holding any money at all
at the ECB. And that would also then be passed on. It would probably be very disruptive of money markets. Consumers would feel it. You want to put money on deposit at a bank. What does the bank do with that? They deposit at the ECB. They'll have to pass on that negative rate to people. And that's why I'm saying it's very disruptive. So more likely, I think, very dovish Draghi, maybe cutting the lending rate, maybe also promising more work, especially what Draghi said at Davos, talking about buying bank bonds that are backed by small business loans as well as household loans. Something like this, but I think that they want to hold off the nuclear options, because what we have is, even though inflation's falling, the PMIs are showing that the recovery is broadening and deepening. So nominal GDP probably isn't as affected as we'd think by the falling rate of inflation.
Okay, let's now move on to America, where there are equally problematic things to discuss. We had a shockingly bad ISM number to start the week. Meanwhile, we have unemployment, which is very steadily improving, even though we all know there are many caveats about that. We also have a very new person in charge of the Fed. How is unemployment likely to affect the choices for Janet Yellen? How much power of freedom of maneuver does she have at this point?
Yeah, I think that in some ways, if I had the honor of advising President Obama, he said to me, we want to make sure that Janet Yellen is a weak leader. I would tell him to do 4 things. One, I'd say to him, make it clear that she's not your first choice.
Which obviously was the case with the dalliance with Larry Summers.
Yes.
Right?
Secondly, I would say, have Bernanke, before he leaves, provide forward guidance and put the Fed on a path that the new chairman would have to stick to, that there's a sticky path, that if she would, and I think that's what Bernanke's done. And that's really a question with the forward guidance. How can people give the forward guidance who aren't there to implement it?
Right.
Third thing I'd say to him to do is have someone to be her vice chairman who is going to outshine her. And so they picked if there's a rock star, and if it's not Mark Carney, it'd probably be Stanley Fischer, who is the Israeli central bank governor, but also he was on the dissertation committee of both Bernanke and Draghi. He's going to overshadow Yellen. And the fourth thing I'd say to him is you want to have Bernanke stay to the very last minute, even though Yellen would be confirmed in early January. And that's exactly what's happened. So I think that Yellen's going to be a very weak leader, partly due to the way this whole situation's been handled. And I think that means the market's going to be fickle. And by fickle, I mean a second month of weak jobs number, people are going to think maybe the Fed should stop tapering. You know, many people thought the Fed should stop tapering after the emerging market blew up, which they didn't do.
But Yellen really doesn't have the freedom, you're saying, given how weak her position is, to decide, no, we're not going to cut purchases by 10 billion next month.
Exactly. And so I think that we might get a shock on the, because of the weather, we might get a shock on the monthly non-farm payroll number, but the bigger surprise, I think, for people is going to be that the unemployment rate is going to fall sharply. Possibly because of, we've basically in the U.S., we have not extended the emergency unemployment benefits, which have left about 1.7 million people without benefits, and we think a nice number of those probably left the labor market completely.
Right, okay. Mark, thank you very much indeed. That's provided us a route map. It's shown us that there are really rather a lot of hazards ahead of us in the developed world as well as in the emerging world. Be careful out there.